Well, very good. Welcome to you today. We're delighted to have you on our Tuesday webinar. So thank you for joining us. We have people on Facebook as well as on the live Zoom. And today we're going to talk about the power of compounding. And the power of compounding is something that is, as Einstein said, one of the 8 wonders of the world. Now, what you're seeing on your screen here is a spreadsheet that we've prepared in Excel that really talks about the different amounts that you can put into D.AI.SY and the different ways that you can consider to withdraw, and making the point that withdrawing too much and too often is not the way to build wealth, certainly in the short term. So in how the wealthy build wealth is by earning profits and then putting those profits to work to earn more money. In other words, make money on your money, make profit on your profit. And that's a secret in D.AI.SY as well. So we have a couple of scenarios that you'll recognize in terms of D.AI.SY. 100, you can join at different levels, 100, 200. Each of these doubles at each level, 100, 200, 400, and so forth, with the cumulative value here. And we're going to pick a couple of soft spots. I'll also show you another one. So actually, let's start with this level number 3. This is where some people are coming in and really what it would take. And you'll see that the smaller the amount, please understand this, the smaller the amount that you put in, the longer you will need to compound. The bigger the amount you put in, the lesser time you will need to compound to take out amounts that would be considered, really useful to the average household, let's say in, much of the developed world. So North America, Europe, Australia, New Zealand, Japan, countries like this. So that's what I'd like to show you now. If you're in economies in Southeast Asia or in Africa, where the standard of living is and the cost of living is considerably lower than in Europe or the Americas or Japan and so forth, then some of these things will work. So what I'm going to do is start. We'll go through some of these scenarios, but I'm going to assume that you've come in, for example, at tier 3, and bear with me because we'll show you how this works. We'll play around with a couple of different scenarios, but our starting point will be there. So what we're going to do is put in the amount of $700. That is your contribution. So you put in $100, tier 1, $200, tier 2 for a cumulative of $300, and then $400 for tier 4. And so you got a total of 10%. Now, Endotech, the company that is doing this trading for us. So we're now talking about the trading side. There's 3 different ways to make money with D.AI.SY. The trading one is what we're talking about here. The referral plan is the second one. And of course, there's the stock equity side of things. So if you put in $700 and you're keeping that in there, and we're going to assume Endotech tells us that a reasonable expectation based on the past. We can't have an expectation because everything is new going forward, but a reasonable return historically for them is about 200%. So 200%, if you do that on a monthly basis, compounding. Now remember, this is compounding. 200% on an annual basis is about 10% per month. So just to make it simple so that everybody can understand it, we're going to talk about that 10% per month, okay? So what I want you to see, I'm going to make this very simple for you. So if you put in $700, follow with me. So we've got 2 alternatives. So here's the funding total here. Here's the 10% monthly ROI. And if you have $700, this is in month 1 through 12. So this is talking about over a year. You're going to make on $700 at this rate with no compounding. So this is you making a withdrawal. So the other thing to say about the withdrawals is that you need a minimum of $50 to make a withdrawal. So you can see if you are, and we've seen this, doing this on the Tuesday, the withdrawals went live yesterday, and a lot of people they hadn't paid attention maybe, or hadn't had it explained. A lot of people were thinking, they could put in $100 or $200 and they'd be rich. And I'm laughing because that's just a crazy expectation. But even that they would have substantial amounts to withdraw after a month or even a couple of months. So what I will show you is there were some people that joined in January. So if they had been withdrawing every month, they would have just about that minimum amount of $50. So if you do want to withdraw on a monthly basis, you could see that probably the minimum amount of money that you want to put into DAISY would be this $700 one, or we'll go up to the next one after that, which would be $1,500. So this is kind of, if you want to make a little monthly withdrawal and have a little cash flow out of it at that level, at the minimum level, probably the minimum you should consider is tiers 3 or 4. That's what we can see coming out of this example. But let's just show you how that works. And then also let's see how it works when you compound. So this, many people can afford to do this, or we'll do in a second, the $1,500 one. But if you've got that and you're getting a 10%, now bear in mind, your 10% of 700 is $70, but you get 70% of the profit. So out of a total profit of 70, they're going to take out 15% as Endotech's success fee, and another 15% goes into the referral pay plan. All right. So everybody remembers that from the presentation. That's exactly how it's done. And so out of 70, you have 49 left. So you'd be able to withdraw $49. I'm going to assume that we're rounding this up to $50, right? Because that's the minimum withdrawal. But let's assume this is $50. So maybe this is 10.2% or something. Okay. So you can take that out every month, 50, 100, 150, 200, 250, 300, 350. You get the idea. So at the end of the month, or the end of the year, you'd withdrawn 12 times. You've withdrawn 50 times. So at the end of the year, you withdrawn $600. Now you've also earned money from the referral plan, even through 2 levels. You would have earned additional money. So you would have earned back at least the amount that you had originally contributed during that period of time. So you'd have about $600 here, and you would have other monies that you would have withdrawn from the referral plan. And if you referred anybody, you'd be even more into profit. So that's kind of, but we're just talking about the passive side of things right now. The passive investment side of this business. So, and that's what I wanted to show you about simple withdrawal. Now, simple withdrawal is not, I repeat, simple withdrawal is not how you're going to gain wealth. To earn money and to earn wealth as the wealthy do, you need to compound. So where we need to focus and where people need to understand how the power to get wealth comes through the miracle of compounding, as Einstein referred to it. So you would have this money in, and instead of being able to take out $49 or $50, you would leave that $70 in. So they wouldn't take out in the first month. They wouldn't take out the 30%. So you have the full cumulative profit that is going to work for you. Rather than the short-term withdrawal. You have the long-term full power of your money versus the short-term power. Really important for you to see that. And then in the second month, you're going to compound that. So you're not earning now on $700, you're earning on $770, right? And then the next month, you're earning $77, right? So you've got more money, so your 10% return is on a bigger amount, and so your cumulative profit, you've earned 70 plus $77. So your monthly profit goes up because you're starting to compound. You can see that in the second month immediately. Your monthly profit starts to go out. Your third month, and this is where it starts to build up. So now you're earning profit on your profit. So you've got $232. Well, you can see that's a lot bigger than 3 times 70, which would be 210. So you've got $22 of profit that is being earned here, and you've got $232. So $22 of additional profit, and your full $232 instead of zero that you're building up when you're taking it out on a monthly basis. And so you can see this builds up. Now, built in one little caveat to make sure that that Endotech gets some money and the referral plan gets some money for having contributed to people trading. If you do compound, there's an automatic 30% deduction after 6 months for the profits. There's a performance fee for Endotech and also unilevel commissions. So that's taken out. So that would be a withdrawal of $108, and you can see another withdrawal after 12 months. So that's programmed into the smart contract at the 6 month and 12 month. But basically everything is compounding. This is just something to make sure that there's funds in the system to reward the people that are making this happen. But by the end of the year, so let's compare. If you're taking out your $50 a month, you're going to get 588. Technically, let's say $600, just round it up. And if you are accumulating, well, you nearly have twice as much, right? You can see it's 73% bigger, and so you've got $1,016. So let's then see if you've compounded for a year. You're not going to have $70 that you can work with. You're going to have $1,016. So what I'm going to do is put that $1,016, and let's see in the future going forward. So $1,016, still at the same 10% ROI. So now, after a year, you can see instead of $49, you've got an appreciably bigger amount of money. So you could, at this point, maybe start to do some withdrawals, but still to reach, an amount that most people in Europe, North America, Japan, developed countries, and in a lot of other places, you'd like to have this income going better. And if you're really in here to build wealth with D.AI.SY, then you'd want to continue to accumulate. But my point is, you can see you've got 70, a little bit more than that. And so you've got a cash flow. You could start in your second year, start to make some withdrawals. I'll come back to that point in just 1 second, but let's then see additionally, so 2 years, because in all transparency, the CEO of Endotech, Dr. Anna Becker, tells us that if you really want to make money, and this is what the institutions do, they will compound for 2 years. And that's the best way to start to really gain and earn money. So if you're compounding in month 13, because this is now month 13, you started with 700, and it starts to then become a good amount of money. So you're instead of pulling out $50 a month, already at the start of the second year, you're accumulating profit at a rate of 100 to start out, and it's going to grow to a bigger rate. You're going to start to see some big shifts by the end of the second year. And this is the magic of compounding. Really important that you see this. So you're going to compound, there's going to be your automatic deduction at the end of 6 months and 12 months. And so your $700 has doubled your compounding total here, and your cumulative profit now starts to become a very substantial amount of money, right? So let me go back. Yeah, that's right. So that's your cumulative profit. Actually, I did this wrong, didn't I? Hang on just a second. I put in the wrong amount. Okay, so yeah, sorry. I made a mistake. I took the profit going forward, but it's actually the total amount. So this is more dramatic than I was giving the system credit for. So my mistake. Let me correct that. So we had $700, and we let that build up. Of course, the total here is 1716, not 1016. So I only put the profit up here. That's my mistake. I should have put the compounded amount. I saw that when I looked at the second time. So let's see the effect of that. That's 1,716, which should be the amount that we see in here. So 1,716. This is going to look a lot better, obviously. All right. So yeah, then you're at $120. But yeah, now you can see the real effect of compounding. So you're adding these cumulative profits. You're going to add 2,500 in profits, having started it at $700. So by the end of your second year, your $700 has grown to $4,206. You see that? Your $700 by after 2 years has grown to $4,206 by the magic of compounding. So that's where the real magic is starting to happen. Now, at the end of 24 months, at the end of 2 years, you got 4,206. And this is just on a conservative 10%, not 10% per month is conservative. It's a very good return, but it could be higher than that in D.AI.SY, of course, once the AI, the super AI starts to kick in. But at this point, you could start to consider some options because you've actually start to build up some pretty good wealth. You've X'd your money. That's about 6X from $700 to 4,200. So you've sort of 6X'd your money, and in 2 years, that's incredible. And so now you could start to draw out something in the neighborhood of 290, let's say $300 a month. Now, for doing nothing and letting your money compound for 2 years, and then you can take out for indefinitely $300 a month. That's a big contribution. That's a car payment for a lot of people's budgets. That's their food budget. That's a contribution to their rent or their house purchasing. That's a lot of things in many people's households. So that is a really exciting thing. And the other thing you can do is this system doesn't really show us the two differences, but one thing that you could do is start to maybe occasionally take out after a year or two. It's up to you to decide. The sooner you start to withdraw, the slower you compound. So once you start withdrawing, your wealth building slows down. So just be very clear about that. But at this point, you've got a cumulative profit if you're still accumulating money. So I don't have the ability to change this to show the difference, but you could let it accumulate for 2 months, and then on your third month, you could start to make a withdrawal. So you might have say $300, or you might take out this whole amount, your whole accumulated profit on that month, and then you'd have to start over, right? You'd be back at 5,000 if you took that money out. But you could, and I mentioned this the other day. One strategy is to compound for 2 months. I wouldn't recommend doing this from the beginning, not at all. But after 1 year or after 2 years, you could compound for 2 months and then withdraw the third month. Compound for 2 months and then withdraw the third month. So you could start to do something like that. There's a lot of different strategies that will depend on your personal needs, but that's good. Now, if you compound it all the way through this third, you've gotten then $10,000, 10,309. So again, just look at the power of letting this build and build wealth. Because now at that point, look at even if you just wanted to start to withdraw on a monthly basis, you'll be able to take out $720 a month, let's say $725 a month. And so you could just use this as a cash flow machine at that point, or you could shift and you could withdraw twice, 2 months and then compound a third month, or you could flip it, compound for 2 months and withdraw for 1 month. But this is the kind of the way you need to think to build up wealth, right? So that was a small amount of money. Let's go to the next bigger one, 1,500, just to show you there's a big difference when you start at that level. So let's start with $1,500. That's tier 4, your trading contributions. And so when you've got 1,500 in there, that's you've done a $100 contribution, $200 contribution, it's total 300, a $400 contribution, it's a total of 700, the one we just looked at. And now we've got the next contribution, an $800 contribution, that takes you to tier 4, that's a total of 1,500. So again, if you want to withdraw, that's $100 and some a month at a rate of 10%. After you have deducted the 30%. So you're earning $150. The net of that after deducting 15% and 15% is $105 that you can withdraw. Okay. Now let's look at the power of compounding. Your 1,500, your first month, you're taking that 1,500 and you're adding it in, and now you're getting 10% on 1,650. You do it a second month, you got another 150. It's actually 165 at that point because you're getting 10% of 1,650. So you're earning profit not of 150 but 165. So your profit, I want you to see that your profit is going up every single month because you're compounding on your compounding. You're making money on your money. You're profiting on your profit. So this is continues to build and build and build and build, and there will be the automatic deductions in the system at 6 months and 12 months. But at the end of a year, your $1,500 has increased to 3,677. 3,677. So that's the end of 1 year. Then let's kick it into the second year, 3, 6, 7, 7. And we're going to see your cumulative profit, even if you wanted to start withdrawing, it goes from $105 to $250 starting in month 13. And that's where things get really impressive. So, again, this starts, if you're starting capital, your starting contribution is a little bit higher. For many people, this will increase the probability that you're getting some money that can impact, because this is like a car payment. So a year from now, you compounded for a year, that's a small car payment or a contribution to your rent or your mortgage, or a lot of big contribution to your household budget and so forth. But if you compound again that second year, as Endotech recommends, you'd have $9,000. Now you could, with these amounts of money, again, it just depends on how you want to do things. But again, you could do 2 months compounding, a month of withdrawing, 2 months of compounding, a month of withdrawing, and it'll affect the buildup of your cumulative capital here. But you could take some cash flow, and that might reassure you. Of course, you probably want to check that the system is working, although we have tons and tons and tons of social proof. But let's see what happens at the end of 2 years. So if you followed the recommendation and you compound for 2 years, your $1,500 has now 6x. That's the same amount we saw. So you're going to basically 6x after 2 years. And that's the same in all these models at the rate of 10%. So just remember that, 6x 2 years. But let's see what happens after you 6x for 2 years. So we're going to do 9,013 up here. 9,013. And now out of your $1,500 contribution, well, you've got, that's a good payment. That's $630 on a monthly basis. You could, many people would be happy to have that as a steady cash flow coming in, or they might be happy to continue to compound a bit. So you have the freedom then, because you've built up wealth, you've 6x your money after 2 years. And you could do the same thing, compound for 2 months and take out money at the third month, compound for another 2 months, take out money in the third month. And when I say take out money, by the way, take out the monthly profit. Don't take out your total amount. Of course, you're free to do that, but then you set yourself, you turn the tables back. But you can take out your monthly profit occasionally at this point and buy yourself a vacation. do something, buy another asset, do something different, buy some other crypto, buy some gold, whatever the case might be. But yeah, at this point, you're in your third year, and if you continue to compound, you started with a small amount of $1,500, but you're over $20,000 here in some range, depending on how much you've taken out. So this is another scenario, and let's look at. So this is the example we showed you on Saturday. Was premised on this one, 3,100. That's your level 5, and a lot of people like that one. So let's try that. You're going to start on day 1 with 3,100, and again, that'll give you, if you just wanted to start withdrawing, not recommended, but you're free to do that. Obviously, it's your decision. Sort of $200 a month. Just purely passive income. But if you follow the recommendation and compound, then you can see, instead of taking out 70% of your monthly earnings, you're compounding with that $300 a month, 301, which is 10% of what you put in. And that's going to be, and then you're earning on $300 extra. So you've got $3,300 that you're earning on. So the second month, 10% is $330. So that's why this amount gets bigger. And then the amount of profit that you add in continues to grow and grow and grow. And this is why numbers like this, $3,000, you can see this same significant impact of compounding. So 7,300 after a year of just compounding. So we're going to take that 7,377 and see what happens in year 2. 7,378. 7,378. And I'm not going to belabor these examples. I'll just show you a couple more. But this, of course, becomes very exciting. So even from the start of your second year with that 3,000, you'd have a cash flow if you wanted to start to just use that as a cash flow contribution. That's a nice contribution to the average family, $500 plus on a monthly basis. Although still this is just the start of your second year, it'd be recommended to continue to compound. Again, maybe you could compound for 2 months and withdraw the profits of your third month, take out those profits, which would be about $800, something like that here. Take that out every couple of months, take out $800 or $900 or $1,000 as the amount continues to build. But look at it after the end of 2 years, if you just purely compounded for 2 years again, let's put this number in, 18,084. 18,084. Okay. Now look at that. You've got that's passive income. So again, at this point, a lot of people would love to be able to take out like 1,250, 1,300, something in that neighborhood on a regular monthly basis. Or you could withdraw. You could compound again, and then the things become astronomical. If you compound for 3 years, things really become happy crazy land, right? That's the beautiful dream. But you could in your third year, and this is just as I'm putting out ideas for you to dream yourself. Okay, so you could, for example, withdraw 2 months and compound your third month. So if you continue to compound, you'll continue to gain the advantages of wealth. So you would, if you did that pattern, your 1,800, you'd compound 4 times in a year. Your 1,800 would become 2,600, even while you're withdrawing 1,250 to $1,300 a month. So if you withdraw twice and compound once, you'd be able to do that 4 times during a year, right? So you can see your 18,000 would become 26,500 more or less by the end of the year, and then you'd have a larger amount. I could do it again, 26,477, just to show that one example, 26,477. So then you're getting close to $2,000 a month that you can take out. Well, that's like pension money at that point. You know, you may have higher ambitions, but that looks pretty nice as a result over that period of time. So let's take a look. There are some higher amounts that I wanted to show you. So again, if you can do tier 6 or 7, there's some really significant shifts that started to take place. And with tier 8s and 9 and 10, things become quite magical pretty fast. So let's look at your tier number 6, 6,300. I'm not going to keep going with this, but it's important that you see, and you know, this is really visualize the impact for your family. $6,300. That's a tier 6 contribution. The tier 6 level, you put in 100, you put in 200, you put in 400, 800, 1,600, and 3,200. The total contribution is $6,300. Now, at that point, you can just, you know, from day one, take out $441. That is 70% of $630, the 10% amount there. So again, you can see just from a cash flow, you're not building wealth, but you are getting cash flow. And so that's the advantage here. But here's the magic area, the compounding area. So again, if you let this compound 630 and then 630 plus 10%, that's, again, you're compounding on 100% of your profits rather than withdrawing 70%. So the power is compounding 100%. And you can do that you can do that 10 out of the 12 months. There's that automated empowering the system every 6 months. But you can see this begins to grow, and so you've got 630, and then you're going to have $63 on top of that. So you got $693 in your second month additional profit that you're trading on, and the profits just accumulate. So after 1 year, your $6,300 has grown to 15,442. So let's put that money in. That's your the start of your second year, 15,442. Okay, now we've reached, this is where the magic starts to happen for some people. You could even start in year 2 with that $6,300. You can take out $1,000 a month or $1,100 a month. So again, pretty transformative for most families. Pretty transformative. But if you've got the patience, you could let it compound, and your 6,300 is going to 6x. It's the same thing. After 2 years, you 6x your money. So just remember that. That's so powerful. 2 years, 6x your money. And now you could, in the second year, start, if you needed to, you know, do the same thing we talked about before. So I'm giving you this idea, you know, compound for 2 months, take out 1 month. Compound for 2 months, take out for 1 month. So if you do that pattern, you're going to compound 8 months, right? So again, after 8, 1, 2, 3, 4, 5, 6, 7, 8, you would have taken your 6,300, you compounded it for a year. And then at the end of your second year, if you've been taking out money, you'd still have about $30,000. So you more or less 5x your money instead of 6x it, but that's still really good. And then you could continue that pattern, compound for 2 months and take out 1 month. So that's another way of doing things. But let me just show you again, one more example, then we'll move on to the next higher level. So after 2 years, if you compound, if you follow the recommendation of Endotech, which is to compound for 2 years, then your $6,300 has become $37,850, $37,850. And instead of $1,000 a month that you can take out, look at that, that's $2,600. Again, there's where the magic happens. That's pension money. So this is really important, I think, realistically, for a lot of people in sort of North and South America, and North America, Europe, and so forth. So if you can get into this tier 6, put in $6,300 and leave it, let it compound for 2 years. You've now got the ability, that's retirement money for a lot of households. Not for everybody, it depends on your lifestyle and so forth, but that's a significant change to things. And again, you could take out 2 months and compound 1 month over the course of a year. You do that 4 times. So you're 37,000. If you did that, then you'd be up at 55,000. Let's just pop that in there, 55,416. That's in your start of your 3rd year, but 55,416. Then you're at 3,800. So again, the power of compounding is just brilliant. Now I'm just going to do 1 or 2 more examples. Levels 8, 9, and 10. Again, this is 25,500. Let's pop that one in there. That's the level 8. I don't want to walk my way through all of these, but 25,550 as a starting point. So this is your starting point in the system. And again, out of that, you can just use that as a cash flow. So that's 1785. That's, buys a lot of stuff on a regular basis. But if you compound it for a year, that goes up to 62,540. So you've really grown your capital. Again, that's a nice couple of X, almost 2.5X or something. But let's plug that in your 2nd year, 62,540, 62,504, not 540. So at that point, look at that's over $4,000 starting in month 13 that you'd be able to withdraw on a regular basis. So if you wanted to do that, the recommendation is let it compound through this all 24 months of your 2nd year. And your 25,000, again, it's 6Xing. You've got $150,000 here now, and look at the profit. You've made $90,000 cumulative profit. Now that's and that's just in your 2nd year, by the way. So this is really starting to produce some serious wealth for you. And so after 2 years, 153,205. Just look at that. So again, this is starting with a $25,500 tier 8 contribution. So 153,205. Now look at that. So this is magical. This is 6 figures in passive income. Pay attention. Pay attention. You got a tier 8. You put in 25,500. And you now, after 2 years of compounding, you have a 6-figure passive income. You can take out over $10,000 every single month like clockwork. Or you can do what I would still recommend, which is continuing. This is what the wealthy do. They don't stop compounding. So you could start at that point with your $10,000. You got a 6-figure passive income. You could take out 2 months and compound a third. Take out 2 months, compound a third, take out 2 months, compound a third. And you would be able to do that. You'd compound 4 times during the year. So then your funds would go from 153 to 224. And you're only compounding every 3rd month. All right, so let me just show you 224307. 224307. And this becomes magical. $10,000 a month becomes $15,000 a month. And all you did was you're already in your 3rd year withdrawing 2 out of every 3 months. And of course, you can continue to do this year after year after year if you just follow that system. Take out for 2 months after 2 years, take out for 2 months and compound for the 3rd. So look at in year 4, you could start with 328. I'm only going to do this once. 328, 408, and now you're at $22,000 a month. And you could just, you could start to withdraw. But again, do the same thing. Just continue to build wealth. Take out 2 months, withdraw the 3rd. And in 5 years, you got 480. I'll do it one more time because this is fun to see. Most people never visualize this, and that's why I want to do this for you. You can visualize it. Look at you started with $25,500, and you let Endotech build wealth for you with the power of compounding. And after 5 years, you got $33,000 a month. I mean, you could start withdrawing. For most people, that's like hallelujah time. They're well beyond hallelujah time. $10,000 a month is hallelujah time for most people in the developed economies. But you can see, incredible. And, if you do it one or two more times, you're going to be a millionaire in passive income. Now, just going to do one last example. You'll see why people go in at level 6. This is what my wife Grace did. So $10,300. And so you can see where that is. It's your starting contribution. Now the capital amount of that, just to be clear, is 69,080. So if you start with that $70,000, we've showed you screenshots of that, but as a starting premise, 10%, you'd have 4,800, maybe $5,000, something in that neighborhood. But if you let it compound after a year, look at that's 169,324. So again, just to show you why this amount becomes so attractive quickly, 169,324. So again, starting in month 13, you're in a 6-figure passive income. So again, the more money you put in, money loves speed. Money loves speed. So the more money you put in, the faster it compounds, and the more that compounding compounds on itself. So in year 2, in month 13, you got 169. So 10% of that is 16,000 a month. Instead of taking out and withdrawing 11,000, 70% of the profit. Instead of withdrawing that, you're letting it compound. So again, you're getting the miracle of compounding and starting to build up. But look at your 69,000 after 2 years becomes 415,000. Check out what happens if you compound for 2 years. At the tier 10, 415,000, 35, 415, 35. Now watch this. This might take your breath away. So we were already looking at a monthly takeout income of $11,000. But if you let it ride to the end of 2 years, $30,000. That's pretty fast to generate multiple 6-figure income. And again, just watch. So like in year 2, at this level, you can take out $30,000 a month, every 2 months, and then let it compound. So at the end of that year, you will have compounded 4 times. You can see you've grown from 415 to 607. So after 3 years, 607. This is the last example I'm going to do here. That's 653. So this is your tier 10 after 2 years, and the kind of money that you can generate. That's $42,000 a month that you could, and again, I would still recommend, take out for 2 months and compound for 3, because if you continue to do that in year 4, you're going to be at 889,665, 655. So you're at $60,000 a month 4 years from now, and you're still compounding 4 times a year and withdrawing 8 times a year. But you're withdrawing at this, you can live super luxuriously with $62,000 a month times 8, right? So you don't need to withdraw all this money. You can let your wealth continue to build. And in year 5, 1302555, this is like the millionaire dream. 13025, what is it? 544. So this is a tier 10. Look at you're getting all $90,000 a month at this point, and if you continue to compound it, let's just go crazy. Year 6, why not go crazy? Because you're a millionaire at this point. So you've got more money than you need. You're contributing. You're donating. You're blessing your family. You're blessing the world. And you've got 133,000 monthly income. So this is a millionaire income after 5 years. And you could do that again, just that same system, withdraw 2 months and compound for 1. You'd be able to do that 4 times a year. And it's this amount right here that you're compounding. So I mean, that's the crazy kind of stuff. But I did want you to see just how powerful these things are. Let's go back to what a lot of people are happy to plug themselves into this $6,300. I've shown you the upside of that, but let's do that. That's a tier 6 example. That's kind of an average tier 6. A lot of people find that as kind of a sweet spot. So again, remember that that's going to start at about $450. And if you compound for 2 years, let's just plug that in again to finish this up. 15,442 is your month 13 starting point. This is for your, kind of your average person in there. So at the end of 2 years, you're going to have 37,850 if you compound during that whole period of time. So 37,850. Let's just remind ourselves what that is. This is really achievable for your average person. 37,850 after 2 years, and you got a $2,600 income that you could begin to withdraw. And that's after 2 years. You have 6x your money. You started with $6,300. You've 6x your money here. And now, if you follow the system I recommend, after 2 years, take out for 2 months and compound for 1 month. So again, just starting from $6,300. At the end of year 3, you'd have 55,416, 55,416. So this still becomes miraculous, because now you've got close to $4,000 on a monthly basis you could take out, and you do that 8 times a year. Just follow the same pattern and continue. You're now thinking like a wealthy person. So you are going to take money out, but again, after your 3rd year, start of your 4th year, you're going to have 81,135, 81,135. Yeah, there we go. So you're getting 5,000. This is like the average income in Europe and North America of a family, and you're getting this passively. Then this is not the only way you're making money, but this is after 4 years, and you can do this again and again and again. So you can from this point you can start to really build serious wealth. So 118,770, 790, 118,790. Just want you to dream. I want you to dream. Yeah, so you're getting $8,000 a month. If you wanted to do that, you can take that out 8 times a year and compound 4 times a year. You're going to be at 173,920. Look at it, just starts. It's the miracle. It's the miracle of compounding, and it's so powerful. So now you're into 6 figures. This is after 5 years. You're into 6 figures, and you started with $6,000. You got capital working for you of 173,000, but by the end of that year, you could be up to 250. I'm going to do this one more time just so that you can see. 254, 636. Yeah, $17,000 a month. So you can do that 8 times a year and just continue. You can become a millionaire passively from this point. But this is walk away, long-term money. So that's really what I wanted to show you today, ladies and gentlemen. I know it's a lot of numbers and it may be a little bit confusing, but what I want you to see is I walked you through, these tier 1 and tier 2. You're going to need to compound for a couple of years. Don't have that crazy, unrealistic expectation that you're going to be rich from doing this. But if you're consistent and if you're patient, this money, as you build it up, $100 and $200, I showed you the example using $700, and we've walked through, from $700, I skipped the tier 9, so I didn't do that one here, but we've shown you the rest, and that is really what is, certainly achievable with DAISY. Now, do bear in mind all the caveats. This is not a guarantee. Past results are no guarantee of future performance. So there's the caveat there. This is not investment advice. This is just this is a game we're playing here, just to show you some ideas of what's possible. So do bear in mind all the usual caveats. But I trust that this has been instructive and useful for you. What I want your brain to do is just have fun with it, but also learn the lesson of compounding. And when we do that, we'll have powerful, life-changing things start to happen in our lives. So again, thank you for today. This is the power of compounding, and I trust that you now see it. Enjoy this, and let it work for you, and it'll change your life and the lives of many people around you. So again, thank you for watching, and we'll talk to you again on one of our next webinars. Thank you so much. Bye-bye.